Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, welcome back to the second video of ESOP, Employee Stock Option Plan. This chapter of Group 2 Advanced Accounts we have started. Now in this second video we are going to solve this problem, illustration 2 of the study material. But before doing that, let me just tell you in the first video what we have done. In the first video we have seen the concept of ESOP, and we have seen the accounting treatment, the journal entries, and we have discussed lots of things really, isn't it? Yes, so please make sure you watch this video first, okay, the first video of ESOP, and then come back and watch this second video. Right, now let me just recall few things here. See, what is ESOP? ESOP is a way of making share-based payments to the employees. Right, now why do we give ESOP to the employees? Because we don't want our employees to leave our company. That's why we give ESOP. We issue ESOP to our employees. Yeah, now what is ESOP actually? ESOP is what? Employee stock option plan. It is an instrument. Yeah, physically it's an instrument. It's just a piece of paper that is given to the employees, and with that piece of paper, with that instrument, what employees can do is they can purchase the shares of the company at a very low prices. Yeah, most it will be low prices, okay, concessional rates in future. Only when they are eligible, then only they will be able to purchase the shares. Yeah, they have to be eligible. Those options, those ESOPs have to be eligible, and that eligibility here in this chapter is called as vesting. Okay, vesting. Fine. So here what did I tell you? ESOP is an instrument which is given to the employees. With that instrument, employees are able to purchase the shares of the company at a very low prices. Yes, but they would be able to do that, purchase the shares with that instrument, only when the such conditions are fulfilled. Okay, some conditions will be there in that ESOP, and those conditions have to be fulfilled, such as service condition, performance condition. Performance condition means what? It means that employee will have to achieve some targets, okay, some income he has to earn for the company, like that. Yeah, and the main thing is the service condition. Service condition will be what? You have to be an employee for a certain period, 2 years, 3 years, 4.5 years, like that. Yeah, some condition will be there in the ESOP. Only after fulfilling those such conditions, then only employees will be able to exercise those options. Okay, those options will become eligible, and employees will be, they will be able to exercise the option. By exercising the option mean they can buy the shares with those options. Yeah, or what they can do is, it's an option, right? It's a right but not an obligation. So they have a right, yeah, not an obligation. It's not compulsory, not mandatory. If they don't want to buy shares in the future, what they can do is just don't buy, and a time will pass, exercise period will pass, okay, prescribed period will be there, then those options will become lapse, they will get expired. Yeah, so this is the concept of ESOP. Yeah, that's what we saw in the previous video. And then we also discussed lots of terms over there. Yeah, grant date, vesting, exercise price, so many things we have discussed. Okay, really, so please make sure you have watched that first video. Yeah, here I just wanted to recall you the basic concept of ESOP. Yeah, now let's go ahead, let's solve the problem. Now here we have the question. Let's go through it once, and we have to understand what is happening here properly. Yeah, we have to put this into a diagram, and the main thing is the dates. Yeah, you have to be very careful about the dates. Fine. Okay, then let's start. See here, ABC Limited grants 1000 employees stock options on 1420x0 at rupees 40 when the market price is rupees 160. So here we come to know that this company is granting 1000 of its employees stock option. Stock option means ESOPs. Yeah, on 1420x0. Yeah, 1st April they are offering that at rupees 40. So grants are offered at the price of rupees 40. So this price at which the grants are offered, the ESOPs are offered, is called as exercise price. Concessional price at which ESOP is offered, that is called exercise price. So this 40 rupees is what? 40 rupees is our exercise price. And then you already know what market price is. Yeah, the price which is traded in the market, that is called market price, rupees 160. Yes. Then what they are saying, the vesting period is 2.5 years. Yeah, 2.5 years, and maximum exercise period is 1 year. Now what is vesting period? Vesting period is the eligibility period. Yeah, the employees have to satisfy the vesting condition. Yeah, condition which you have to fulfill to be eligible for ESOP. So now here the vesting condition is what? 2.5 years, the vesting period. That means it's a service condition. The employees, they have to be in employment of this company for 2.5 years, then only they will be eligible to what? To exercise the option. Yeah, exercise the option means they will be able to buy the shares with the ESOP they are being offered. Yes, so the vesting period. Yeah, that's the vesting period. Vesting period is 2.5 years over here. And what is the exercise period? Maximum exercise period is 1 year. What is this? exercise period means what? It is the period when you can exercise the option. Yeah, it comes right after the vesting period. Okay, in this period you have to exercise your option. If you don't do that, then what will happen? Your options will become lapse. By exercising the option, I mean you have to buy the shares with the ESOP. If you don't do that and the time passes by, yeah, and the lapse period comes, then your options are lapsed. Yeah, when your exercise period is over, then that's done. Yeah, your ESOPs are gone, right? So that's what we can understand till here. Then what are they saying? 300 unvested options lapse on 1520x2. Now what does this mean? Options have been lapsed. Options have been lapsed means that your options have expired, but unvested options have lapsed means the options haven't completed the vesting period. Yeah, somewhere here the options have lapsed, yeah, in the vesting period. That's called unvested options. You know, when the employee completes the vesting condition, yeah, when he completes the vesting condition, the vesting period, then only the options become vested, vested. The options have become eligible to exercise. Yeah, now if the options lapse here, that means the employee has what? He has not followed the vesting condition. Maybe he has left the company. So if he has left the company, that means what? Options have lapsed here only. Yeah, he didn't satisfy the entire vesting period. He didn't satisfy the entire vesting condition. Is that clear? Unvested options means not eligible options, ineligible options. Okay, is that clear? So 300 unvested options have been lapsed in the which date? 1520x2. Clear? Yeah, we'll see that. Then what? 600 options are exercised on 3620x3. Yeah, that means the options have been exercised means the employees have used their options and purchased the shares of the company on this date, the 3620x3. Then what? 100 vested options lapsed at the end of the exercise period. Yes, what has happened over here? Some employees, they waited for too long, they didn't exercise their options. Yeah, they didn't purchase anything, they didn't purchase the shares. Yeah, so what happened? Those options got lapsed, those options expired because they didn't exercise their right. So if they don't exercise their right and the time passes by, exercise period finishes, yes, what will happen? Your options will become lapsed, expired at the end of the exercise period. Now what we have to do? Pass the journal entries giving suitable narrations. Yes. Now when we see the question, what do we do? First you have to identify the vesting period. Yeah, that's what we did first. So here the vesting period was what? Vesting period was 2.5 years. Yes. Then what? Number of ESOPs. So how many ESOPs are being offered over here? 1000 ESOPs, right? Because here 1000 employees are there and here they are not saying anything regarding options. So we are assuming here one option is being offered to each employee. Yeah, sometimes they say 1000 employees are there, 20 options are offered to each employee. Yeah, they will say something like that, but here nothing is said like that. Here just 1000 employees, stock options. So we will assume that it is singular and we will take assumption like that, right? So the total options here are how many? 1000 employees into one option for each, that is equal to 1000 options. Is that clear? Then what do? We have to calculate value of option. Yeah, what is value of option? Value of option is the discount that is being offered by the company. Yes, discount is being offered over here, right? The market price is 160 and which price you are getting? The exercise price is at 40. So if market price is 160, and you are getting exercise price at 40, that means what? You are getting a discount of 120. You as an employee, you are getting a discount of 120. So that's called value of option technically in this chapter. Okay, now here you see how will you calculate value of option? Sometime in the question it will be directly given. If it is directly given, you have to take that and just go along. Yeah, just solve the problem. Or you have to calculate the value of option through the intrinsic value method. Yeah, this is the second priority. Now what is the intrinsic value method? Nothing, just what we did, market price minus exercise price, you got value of option. That's the intrinsic value method. Yeah, so see here the diagram. Yeah, see, market price 160 minus exercise price, you got value of option. Clear? Yes. Now we have to understand the diagram properly. What is happening over here? I have just gone through the question now, but let's put this into a diagram. Yeah, how will you put this into a diagram? See here, it's very simple. What is happening? First, ESOPs are offered, right, at the grant date 1420x0, right? That's the grant date, the date at which ESOPs are offered. Yes. Then what happens? The vesting period. You have to consider the vesting period. Vesting period is of 2.5 years, right? So 1 year, 0.5 year. Yeah, 1 year has been passed, 2 year has been passed, and 2.5 year has been passed. Yeah, so this is our vesting period. Yeah, isn't it? Yes. So now what is happening? then what, 300 unvested option lapse on 1520x2. So where does this come? 15x2 will come in the third year, right? After the second year, see 31st 3x2, here the options have been lapsed, isn't it? Yes, 31st 3x2, then what will come? This is March, April, May, this is May, right? 5. So 1st May, what has happened? 300 option has been lapsed. Why options got lapsed? Because maybe the employee has left the company. If he has left the company, then ESOPs are of no use, yeah, because ESOP are of use only when they are eligible, and they will become eligible only if you satisfy the vesting condition, you know that, right? So yeah, 300 options have been lapsed, and then what happens? And then what, 600 options are exercised on 3620x3. Now 3620x3, where does that come? See here, that comes in the fourth year, isn't it? 3620x3 comes in the fourth year. Yeah, see here, this is the third year. Yeah, this is the third year. So here our vesting period will end, isn't it? 1 year till here, 2 year, and then 2.5 year. Here the vesting period will end, and then the exercise period will start. So from 30th September 39x2, exercise period will start, and exercise period will last till how much? They have said maximum exercise period is 1 year. So if exercise period is 1 year, that means what? From September till the October, right? Because here you will not take September into account, will you? No. So from October 1st till what? Till October 1st of the next year, isn't it? Yeah, that's the exercise period. Now in that exercise period, the employees have to exercise their option and buy the shares. Yeah, and they have done that. How many employees have done that? 600 employees have done that. Yeah, you just have to see how many options have been exercised. Okay, so 600 options are exercised on 3620x3, so it's somewhere in the fourth year in the exercise period itself. And then they are saying 100 vested options. That means they became eligible because they satisfied the condition, so that's why vested options, yeah, eligible options, but they didn't exercise their right till the end of the exercise period, so these options are lapsed. Yes, you know that the options will become lapsed. Yes, so this is it. This is the diagram, right? The grant date, and then at the end of every year, what you have to do? You have to make the journal entry. You have to pass the journal entries here, here, and here at the end of every year, isn't it? Yes, and the vesting period is this much. In the calculation, you have to consider the vesting period properly. Yeah. So now let's solve the problem. Did you understand how to put this into diagram? Yeah. Value of option, the discount which we are offering, 160 minus 40. Yeah. We are being offered, I mean the employees are offered, you know, the ESOPs are at 40, the market price is 160, so value of option is 120. Now we calculated this through which? Through intrinsic value method, right? Yeah. And then number of options, 1000 employees into one option each, 1000 options, right? 1000 options. Let me write that. 1000 options. Clear? So now let's solve the problem. Let's see how to pass the journal entries, but the main thing is the calculation. Yeah, this discount value of option which the company is offering, we have to transfer this value of option to profit and loss. Yeah, because this is an expense. Discount is an expense. So how are you going to transfer this value of option? You can't directly take, you know, now I'm not talking about just 120 into 1000. Yeah, that's what I'm talking about. Yeah, the gross amount, the gross expense, how are we going to transfer that to profit and loss? Can we transfer the entire expense to the first year itself? No, we can't do that. I've told you that in the previous video. Now here, this expense, this value of option, this discount which you're offering, this expense we are incurring as a company because of ESOP. And why did we give ESOP to the employees? Because we can get benefit from them. Yeah, they can be our employees for the entire vesting period, here 2.5 years. So you are getting benefit of this expense of 2.5 years, isn't it? You're getting the benefit, right? The employees are working for you, they are giving the service to you. Yes, so how can you recognize this expense entirely to 1 year itself? You can't do that. That's against the guidance note. Yeah, the guidance note says you have to spread this expense, value of option expense, this discount, it's called as employee compensation expense. Yeah, this expense you have to spread it over the period of the vesting period. Yeah, over the vesting period. How many number of years are there? In that period you have to spread it. So how are we going to do that? There is a bit calculation, there is a bit formula. Yeah, which is that formula? This formula, right? This formula we have to use, and we have to properly calculate at the end of each year. Yeah, हर साल के एंड में तुम्हें कैलकुलेट करना पड़ेगा ये फॉर्मूला लेके, और जितना भी अमाउंट आएगा हर साल में उतना अमाउंट तुमको employee compensation expense में लेके profit and loss में transfer करना पड़ेगा, right? That's what you have to do. You have to transfer employee compensation expense to profit and loss. So at the end of every year, you will have to do that formula, that calculation. Now we'll see the journal entries. Yeah, we have discussed lots of things over here, right? Let's go to the journal entries and the calculation. Now here we have the solution. Let's understand how to pass these journal entries, how to do the calculation and everything. Yeah, So see, the journal entries of ESOP are very simple. See, do you remember the entries of salary? How do you pass the journal entries of salary? Salary paid would be what? Salary account debit to cash. Yes, you have paid the salary. But are we paying anything over here? Are we paying anything? No, we are not paying anything in here, right? In ESOP, what we do is we give them shares. We don't pay anything. We just give them shares when they satisfy the condition. Yeah, we don't give the shares immediately. We just give them a document, right? In the beginning, we give them just a paper, a piece of instrument, right? A piece of paper. So with that paper, they will be able to purchase the shares in the future in the exercise period. So right now, in the first year, second year, third year, we are not giving them anything. Yeah, we are not gonna give them anything, isn't it? Yes. So if we are not giving them anything, then what used to be the entry in our salary? If the salary was outstanding and we don't pay the salary, we have to record the transaction, right? Salary account debit, an expense has been incurred. We have taken the benefit from our employees. They have worked for us. So we have to debit the salary and we have to recognize a liability to salary outstanding account, isn't it? That's what we used to do. And at the end of the year, whether we have paid the salary or not, what we used to do? We used to transfer the nominal account to the profit and loss account. Yeah, we used to close the salary account and transfer the balance from there to profit and loss account. Yeah, salary debited over here, we recorded the expense, then we reverse the expense, or we transferred this salary account to profit and loss account, isn't it? That's what we do. Similarly here in ESOP, what is this? This is a compensation which we are giving to the employee, right? We are giving them shares at a very low price. So by giving them at a low price, we have to incur a huge loss, a huge expense, really, isn't it? That's called employee compensation expense, isn't it? Yeah, the market price was how much? The market price was 160 and we are offering them the ESOP, the shares, at how much? At rupees 40. Yes, so we are incurring a loss, a discount of 120. We have to bear this loss, right? This is an expense for us and this has to be transferred to profit and loss. Yeah, so technically in the journal entries we call that as employee compensation expense. Yeah, value of option, what do we call in journal entry? Employee compensation expense. And as I said that this expense has to be taken to profit and loss account, and we can't take it in 1 year itself. We have to take it over the vesting period, because we are taking the benefit from the employees over the vesting period, right? They're working for us for the entire vesting period. So this expense which we are incurring because of ESOP, we have to transfer this to profit and loss over the number of years. Yeah, we will expense it here in the first year, in the second year, and also in the third year, right? Depending upon the vesting period, we have to do this allocation of employee compensation expense, right? Okay, so here the journal entry that we have to pass to recognize this expense that we are going to incur, yeah, employee compensation expense, value of option expense, that discount, the entry would be like this. We have to just record the expense, right? Employee compensation expense account debit. Yeah, we have to recognize the expense. And then what do we do? Are we paying anything? Are we paying cash? Are we giving shares now? No, we are not. We are not going to give anything, right? At the end of the first year, what are you going to do? You are not going to give anything. You just have to recognize the expense. Sirf expense recognize karna hai, and you have to recognize a liability to ESOP outstanding, or you can also say to ESO outstanding. Okay, ESO, employee stock option outstanding, or employee stock option plan outstanding. Okay, the same thing. Fine. So this is the entry you have to pass. Expense record, and then record the liability. You have to recognize the liability, because you are going to what? You are going to give them shares in the future. You are going to give them shares in the future during the exercise period. Yeah, exercise period. Yeah, there you're going to give them shares. They will purchase shares from you at a very low price. So that will happen in future. Yeah, so there is an obligation for you to give the shares in future. So that's why you have to recognize a liability over here, expense and liability. And then afterwards, what you will do, you have to transfer this employee compensation expense, this nominal expense account, you have to transfer it to profit and loss account, the same way how you did with the salary. Is that clear? Yeah, how do you do with salary? You transferred it to profit and loss account, right, by crediting the salary account. Similarly here, employee compensation expense was debited, you recorded the expense, you will credit that with equal amount and transfer it to profit and loss account. You get that, right? Simple. So this is what you have to do. So now that's what exactly we have done over here. See here in the first entry, what we have done, employee compensation expense account debit 48,000 to ESOP outstanding 48,000. Now this is happening on the which date? 31st/3/X1. Okay, at the end of the first year. We always record the journal entries at the end of the first year. No entry will be passed on the grant date. Okay, on the grant date nothing is happening. We are just offering the ESOPs. Okay, Yeah, no shares are given, nothing. The expense has to be recognized at the end of the year, right? So both these entries will happen at the end of the year. Okay, so employee compensation expense account debit to ESOP outstanding, you will recognize the liability and record the expense, and then at the end of the year you will transfer it to profit and loss account. Yeah, but then the main thing is the amount. How did I get this 48,000? Yeah, what is the logic behind that? See here, for that you have to understand that formula. See, what did I tell you? That expense, this value of option gross amount, you have to spread it over the number of years, right? वो spread करना पड़ता है पूरे vesting period पे. तो क्या करना है, वो कैलकुलेशन करना पड़ता है विद द फॉर्मूला, राइट? सो दैट फॉर्मूला इज वेरी सिंपल. सी हियर, सी द फॉर्मूला कैसा होता है? कैलकुलेट एम्प्लॉय कंपनसेशन एक्सपेंस. इट्स फॉर्मूला इज वेरी सिंपल. एग्जिस्टिंग ईसॉप, जितने भी ईसॉप तुम सोचते हो या वट एवर यू थिंक द ईसॉप दैट गोना एक्सरसाइज इन फ्यूचर, हाँ तुम्हें देखना पड़ता है एट द एंड ऑफ द एवरी ईयर यू हैव टू थिंक हाउ मेनी ऑप्शंस विल बी एक्सरसाइज इन फ्यूचर. तो तुमने कितने ऑप्शंस इशू करे थे? वी इशूड 1000 ऑप्शंस, राइट? Isn't it? Yes. So on this date we are hoping that all the 1000 options will be exercised in future. Yeah, you are thinking that 1000 are existing options. Is that clear? So that's what you have to take over here. 1000 option exercise होने वाले हैं. 1000 options will be exercised in future. So this is an estimate. You are taking an estimate over here. This can change in every years. Okay. What can happen? देखो इधर क्या हुआ? इधर हुआ 300 option खत्म हो गया, है क्या नहीं? 300 option lapsed here, right? So now at the end of the year what you will say? 700 options will be exercised in future because 300 option has been lapsed, right? So at the end of the third year this figure will change 700. Yeah, so देखो simple है, जितने options तुम सोचते हो कि exercise होंगे in future, that's what you have to take. Options, you know, the employees will exercise. Existing options you have to take into value of option. अभी ये खर्चा तुम calculate कर रहे हो. You are calculating employee compensation expense. And I've told you, employee compensation expense is directly what? It is the expense that the company is incurring because of ESOP, and the expense is what? Value of option. Isn't it? The discount that is being offered, right? So you have to take number of options, number of ESOPs into the value of option. Now here the value of option is what? 120. Okay, now the value of option will never change. Okay, value of option will never change. Why? Because the market price which we take, right, in the calculation, it will always be taken of the grant date. Now sometime in the question what will happen, you will see that in the material also. Yeah, they will give so many market prices. Here a different market price, here different market price. Yeah, don't worry, you have to ignore all that market prices. You just have to take the market price given at the grant date. Yeah, in the question they have said, where is the question? See here in the question what they have said. See here, on 1420x0 the exercise price was 40 when the market price is 160. When the market price, so they are talking about this date at the grant date. So grant date market price is important. The rest market price are irrelevant to us. Okay, वो सब market price को पूरा ignore करना है. Right, so this is the formula that we have to use. The options which we are expecting to exercise, and then value of option, discount, okay, and then into lapsed vesting period. ये हमेशा constant रहेगा. Okay, this will never change. Value of option will always be constant because if market price is constant, which we always take of grant date, then value of option will always be constant. And even the fair value of option is given, yeah, then also that will not change. Okay, it will stay the same. So value of option is constant. This can change. And then here what you take is the vesting period, because here, as I said, we are spreading this employee compensation expense on the basis of vesting period. So what you have to do, क्या करना है तुम्हें इधर vesting period का fraction लेना है. You have to take the vesting period fraction. Lapsed vesting period divided by total vesting period. Okay, या कितना vesting period गुजर गया और total कितना vesting period है. Now at the end of the first year what are you going to take? 1 divided by 2.5. एक साल गुजर गया और total हमारा vesting period 2.5 years है, right? So see the calculation here. I will show you the calculation now within a second, right? See here. 1 divided by 2.5 lapsed vesting period, how much vesting period has gone by, and total vesting period you have to take. Okay, so this is the calculation you have to do, and you have to subtract total expense already recorded in P&L. See here, this is called straight lining actually. You know, at the end of the first year what you're going to do, you are going to see how many ESOPs, how many options are going to be exercised into value of option, into the fraction of vesting period, and then what you're going to do, you're going to subtract the total expense recorded already in P&L. Total employee compensation expense. Now this is the first time, right? At the end of the first year, this is the first time you are calculating this, so this will be 0 in the first year. Okay, and then at the end of the second year what are you going to do? Whatever you recorded employee compensation expense over here, you're going to subtract that. At the end of the third year what are you going to do? whatever you recorded in the second and the first year, you're going to deduct that. ऐसा करना है. Okay? Yes. So see the calculation over here. Let's go to the calculation. Let's not waste this time in the looking in the formula itself. See here, calculation of employee compensation expense. So at the end of the first year, we feel that 1000 options are going to be exercised, right? At the end of the first year, we are feeling that 1000 options will be exercised. Yeah, because there is no otherwise any mention of anything otherwise, right? So 1000 into value of option 120, value of option is 120, right? So 120 into the fraction. Kitna time guzar gaya? 1 year has been passed and the total vesting period is 2.5. So put that into calculator. Yeah, 1000 into 120 into 1.25, I mean 1 divided by 2.5. so see here, 1000 into 120 into 1 divided by 2.5, that is equal to 48,000, right? That is equal to 48,000. Now what do we subtract over here? We subtract the total expense that is already recorded, but before this, is anything recorded? Nothing is recorded, so minus 0. So directly 48,000. Is that clear? Yes. Then what do you do? Then go to the next year. In the next year, again you are expecting that 1000 options are going to be exercised, isn't it? Because before this nothing has happened, right? In the second year nothing has happened, so we are expecting that 1000, all of the options will be exercised in the future, right? So we are expecting that 1000 options will be exercised, right? So 1000 into value of option, this will never change, always constant, into the vesting period. At the end of the second year, what you're going to do? 2 years has been passed divided by the total vesting period. 2 years has been passed divided by the total vesting period 2.5. Yes. Then what you have to do? Minus the expense that has already been recorded in the first year. In the first year, at the end of the first year, you have already recorded 48,000 in the P&L. Yeah, you have recognized the expense, so that you have to deduct. Okay, so let's put that into calculator. See here, 1000 into 120, sorry, 1000 into 120 into what? 2 divided by 2.5, that is equal to 96,000. 96,000 minus the expense that has already been recorded in the P&L, that is 48,000, right? This one. So minus that, minus 48,000, so that would be equal to 48,000 only. Yeah, 96 minus 48, 48 only, right? So 48. So in the second year also we will recognize employee compensation expense of 48,000, right? 48,000, right? And then in the third year, what is happening? In the third year, as you can see, what happened in the third year? In the third year, in this year, yeah, this is the third year, right? So in this third year, what happened? As the question says, let's get the question. See here, 300 unvested options lapsed on 1520x2. 1520x2 comes in the third year, right? So here the options have been lapsed. 300 options have been lapsed. Okay, unvested options. Fine. So then at the end of the third year, where we do the actual recording, 31st 3x3, yeah, this is the exercise period actually. From the September onward is the exercise period, but still we record the transaction at the end of the period, right? At the end of the year, 31st March x3. So here, what are we gonna do? Here we know that 300 options have been what? Lapsed. If 300 options have been lapsed, then the remaining is how much? Remaining is only 700, because the total options that were there were only 1000, right? So the remaining options are 700. So now we know, that's why we can safely say that 700 options will be exercised in the future. 700 options, 700 options exercise होंगे in future. We can estimate that, right? Till here, till 31st 3x3, employees haven't exercised anything. They haven't exercised any options because the exercise has happened. Options, shares कब खरीदे उन्होंने? I mean the employees, when did they purchase the shares? They purchased the shares in the fourth year, 3620x3. Yeah, after the 31st 3x3, they purchased in June 3620x3, right? So that's in the fourth year. So till this day, till the end of the third year, no option has been exercised. So we can safely say that 700 options can be exercised in the future. We can estimate that. So 700, the option that can be exercised, yeah, 700 into value of option 120, that will never change, and then you have to take the vesting period fraction. Yeah, whole 2.5 year has been passed. Yeah, now you are recording on the date of 31st 3x3. Now don't think 3 years has been passed. No, 3 years has not been passed. We are talking about only the vesting period. We are not talking about the general time. No, we are talking about only the vesting period. So vesting period only 2.5. The entire vesting period is finished. So 2.5 divided by 2.5. 2.5 has been passed. The total period is also 2.5 years, right? So put that into calculator into 2.5. That will cancel it out, right? Divided by 2.5. So it will be equal to 84,000. So now again we have to deduct whatever that we recorded previously in the P&L. So we recorded in the first year 48, in the second year 48,000. So in total we have recorded 96,000. So yeah, 48 plus 48 is 96, right? So 96 we have to deduct it in the third year. Yeah. So 84,000 we got, right, from this calculation. So minus 96,000, that is equal to minus 12,000. So whenever we get figures in minus, right, negative, that means we have recorded more expense and we have to, reverse the expense. We have to reverse the expense. So this 12,000, what will happen? Here we were recording the expenses. 48,000 goes to P&L, 48,000 goes to P&L, and we are also recording the liability, ESOP outstanding. Yeah, and this liability used to go to balance sheet on the reserves and surplus. Yeah, in reserves and surplus. But now here what is happening? Here we have recorded more liability. Yeah, we have recorded more expense and liability. So now what we have to do? We have to do reverse. Okay, remember that, reverse. We will reverse this. Fine. Okay, right, then what? Now go to the journal entries, simple journal entries. I have already explained the journal entries to you. Employee compensation expense account, debit 48,000. We are recording the expense. Yeah, you have done the calculation. If you have done the calculation, the entire problem is done. You just need to know the debits and credits. That's all. See here, employee compensation expense account, debit 48,000. To ESOP outstanding 48,000. Yeah, at the end of the first year you're doing this 31st 3x1. Yeah, you recognize the expense, recognize the liability, because you're not giving anything or paying anything. So you have an obligation to give shares to the employees in future at a low prices. So you're giving them at a low prices. So now you have to make a reserve for that to ESOP outstanding. Yeah, it's like that. Yeah. So profit and loss, you will transfer that expense to profit and loss with an equal amount. So employee compensation expense account will be cancelled out. Debit equal to credit, it will be cancelled out. And profit and loss account will also be no more. But the only thing that will remain is the ESOP outstanding account, or you can say ESO outstanding account. Yeah. So this ESOP outstanding account, this will go to the reserves and surplus. Okay. Yes, on the face of the balance sheet. Then at the end of the second year, what are you going to do? The same thing. You have to recognize the expense and the liability. The same thing you have to repeat. See here, let me show you how to solve the question. Yeah, how to solve the question. See here. No, that's the accounting treatment. Sorry, the accounting treatment. In the accounting treatment, if you remember, yeah, if the vesting period was 3 years, then what you used to do? At the end of every 3 years, you have to pass these two entries. Yeah, I have told you this in the previous video. Yeah. Why? Recognize the expense, transfer the expense, recognize the expense, transfer the expense. That's what you have to do, right? Yes, so that's what you're going to do at the end of the second year also. At the end of the second year, you are going to recognize the expense, and you have already done the calculation here. 48,000 needs to be recognized and transferred to the liability ESOP outstanding. The same entry you'll pass. Employee compensation expense account, debit 48,000 to ESOP outstanding 48,000, and then transfer to profit and loss. Simple. Yeah. So then what? At the end of the third year, what you're going to do? At the end of the third year, in the calculation, what we have got? We have got a negative figure. So if we have got a negative figure, then what we have to do? You have to properly remember this, okay, and understand this, not just remember. See here, 31st 3x3. Now you cannot, recognize the liability or recognize the expense. Why? Because here तुमने ज़्यादा expense record किया है और ज़्यादा liability हो गई है, तो उसको तुम्हें कम करना है. Yeah, you have recorded more expense and more liability. Yeah, more expense and more liability is being recorded. So now you have to reverse that. So reverse करना मतलब जो debit करना होगा वो credit करना है, वैसे करना है, right? So that's what you have to do. So कैसे करेंगे? 31st 3x3 ESOP outstanding account हमेशा क्या होता था? Credit होता था. Liability used to be increased. Whenever liability increases, we credit, right? We are recording liability. You need to record the liability, then you will credit the liability account. But here in 31st 3x3, what is happening at the end of the third year? You have to decrease the liability. बोला ना मैंने, ज़्यादा liability record की है तो liability को कम करना है, तो debit करोगे liability को. Simple चीज़. ESOP outstanding account को debit करना 12,000 से. जब भी नेगेटिव फिगर आए ये एंट्री पास करना पड़ता है इधर, राइट? सो ESOP आउटस्टैंडिंग अकाउंट डेबिट 12,000, एंड देन दिस I told you that ESOP outstanding account in the balance sheet, where does it go? It goes to the reserves and surplus under the head reserves and surplus, okay, in shareholders funds. Yeah, so इसको क्या करना पड़ेगा? अभी इसको reduce कर रहे हो और उसको transfer करना पड़ेगा एक free reserve में, general reserve में. Okay, that's what our guidance note says. Okay, not the guidance note, the ICI material does this. Okay, the guidance note says you have to transfer it to the profit and loss. Okay, let me just clarify you this. See here, whenever the options lapse before the vesting period, yeah, in the vesting period, I mean in the vesting period, whenever the options lapse and we get these negative figures, we have to transfer actually according to guidance note to profit and loss. Okay, but the study material doesn't do that. Study material transfer that to general reserve. So that's what we will do, okay, because we don't want to lose marks in exams, right? So please do that. Always transfer it to general reserve. Don't transfer it to profit and loss. If you do that, then you might lose marks because it differentiates from the study material. You know that, right? Yeah. So ESOP outstanding account debit to general reserve. That's how you're going to reverse the liability and transfer the balance to the general reserve. Clear? Okay. Then what happens? Then you come to know. Let's get the question. Where is the question? Yeah. Then you come to know that what ABC Limited. Sorry. Yeah, here. 600 options are exercised on 3620x3. Yeah. So here what is happening? Here the employees have exercised their option. They have purchased the shares. उन लोगों ने purchase कर लिए shares at an exercise price. हमको exercise price आएगा ना, हमने 40 पे उनको shares दिए हैं, है क्या नहीं? ESOP किस पे issue हुए थे? Exercise price पे 40 रुपीज़ पे. तो 40 रुपीज़ से हमको shares बेचना है उनको, है क्या नहीं? कौन से दिन को? जो भी दिन वो लोग आएंगे और ये करेंगे, राइट? एक्सरसाइज करेंगे अपना ऑप्शन 3620x3, राइट? सो ऑन दिस डेट दे आर purchasing the shares. Yeah, 600 options they are exercising. So now what you have to do, you have to pass the journal entry. Journal entry would be very simple. See here, on 36x3, on this date they have purchased the shares with their options. So this entry we have to pass. So think, it's very simple. पैसा मिल रहा है, we are getting the cash on the exercise price. Bank account हमेशा किस पे खेलेगा? Always bank account will play on the exercise price. Yeah, yes, always it will play on the exercise price. See here, let me just show you this entry properly. Exercising the option. Whenever the employees exercise the option, this entry we have to pass. We are getting the cash account or bank account debit, and this will always work on X price. ये हमेशा खेलेगा किस पे? X price पे, exercise price पे. और ESOP आउटस्टैंडिंग अकाउंट जो होता है ये किस पे खेलता है? वैल्यू ऑफ ऑप्शन पे खेलता है कि नहीं? एम्प्लॉय कंपनसेशन एक्सपेंस, एक्सपेंस किस पे था? ये कैसा एक्सपेंस था? वैल्यू ऑफ ऑप्शन, डिस्काउंट का एक्सपेंस. वो ट्रांसफर होके कहाँ गया था? ESOP आउटस्टैंडिंग में. तो ESOP आउटस्टैंडिंग किस पे खेल रहा है? वैल्यू ऑफ ऑप्शन पे. तो इधर भी जब तुम डिलीट करोगे लाइबिलिटी, इधर क्या कर रहे हो तुम? लाइबिलिटी को एक्सटिंग्विश कर रहे हो. यू आर एक्सटिंग्विशिंग द लाइबिलिटी बिकॉज you have completed the obligation, you have fulfilled the obligation, you have given them the shares. If you have given them the shares, then what's the liability for? जैसे जब तुम सैलरी पे कर देते हो, सैलरी आउटस्टैंडिंग अकाउंट को कैंसिल ऑफ करते हो जब तुम कैश दे देते हो, right? Similarly here, when you give them the shares that you promised to give them, yeah, if they fulfill the vesting condition and they exercise their option, you promise them, the company promised them to give them shares, right? So if you have given the shares, you have fulfilled the obligation, so you have to cancel the liability which you have been recording in the past, right? So that's what simple. So इक्विटी शेयर कैपिटल अकाउंट हमेशा फेस वैल्यू, राइट? ESOP आउटस्टैंडिंग वैल्यू ऑफ ऑप्शन पे खेलेगा, कैश और बैंक अकाउंट एक्स प्राइस पे खेलेगा, राइट? एंड देन सिक्योरिटीज प्रीमियम बैलेंसिंग फिगर. Always remember that, okay? Whatever extra is there over the face value, that will go to securities premium. Yes. So the entry, bank account debit, money is coming in, 600 options have been exercised. So 600 into what? See here, 600 options have been exercised, and at what? At the exercise price. Exercise price से हमको पैसा आएगा into 40. So that's equal to 24,000. So 24,000 will go to bank account debit. Yeah. And then ESOP outstanding. These liabilities which you were recognizing in the past at the end of every years, you have to cancel that liability because you have fulfilled your obligation. Yeah. So ESOP outstanding account will be debited. It's a liability, like it's like a liability. So you have to debit that to cancel it off. So 600 options have been exercised. 600 into value of option. हमेशा ESOP outstanding और expense किस पे खेलेगा? Value of option पे खेलेगा. 120, right? So 600 into 120, that is equal to how much? 72,000, right? So 72,000 will go to ESOP outstanding account. And then what are you giving them? Are you giving them cash? When you pay the salary, you give cash. But here, are you giving cash? No, you are receiving the cash and you are giving shares. That's what you promised. They can purchase the shares at low prices. So shares are being given. So your capital in your company will raise. Yeah, it will rise. So it will increase, right? So to equity share capital account, you will credit the capital account because your capital is increasing. You are giving them the shares to equity share capital account. Yeah. So always face value will go, okay? 600 into 10. 10 rupees is the face value in that problem, okay? It's not mentioned exactly, but we can assume that safely, right? It's not mentioned anywhere that the face value is rupees 10, but we can safely assume that. So into 10, that is equal to 6,000. So 6,000 will go to equity share capital account, and then whatever extra is there, that will go to securities premium. Now what was the value of the share? Value of the share was 160, right? The market price was 160. Share की actual value क्या है? 160 है. Yeah. तो शेयर था 160 का, हमने 10 रुपीज़ इक्विटी शेयर कैपिटल में बेच दिए, the remaining 150 rupees will go to securities premium. Okay, that interpretation also you can have, or you can just say that whatever balancing figure is there, I will transfer it to securities premium. 6,000 has gone over here. 24 plus 72 is equal to how much? 96. So 96 minus 6, 90 will go to securities premium. वैसा भी सोच सकते हो, नहीं तो do the calculation to be exactly precise. Securities premium 600, options have been exercised, and the price over the face value is 150 into 150, that is equal to 90,000. So 90,000 will go to securities premium. So this is the entry you have to pass when the shares are purchased by the employees, when they exercise the option. And then what happened? And then now we are finally at the end. See here, at the end what happened? 100 vested options lapsed at the end of the exercise period. That means the options have been expired. 100 options have been expired, lapsed. That means what you have to do? The same entry which you did over here. Yeah, you have to transfer the balance from the ESOP outstanding to the general reserve, to the free reserve. Yeah. So this happened on when? The date which you have to take, you have to be careful about that. It happened at the end of the exercise period. Now, which is the end of the exercise period? End of the exercise period means what? This was the vesting period. Yeah, this was the vesting period till 30th September X2. Yeah, then exercise period started, and exercise period was of how many years? Of 1 year. Yeah, maximum exercise period is 1 year. So that means from 30th September, yeah, you can say 1st October, from this 1st October X2 to 1st October X3. yeah, ये 1st October X2 से 1st October X3 तक 1 साल हुआ ना, ये एक्सरसाइज पीरियड है. इसके बाद जो भी पीरियड आएगा वो क्या होगा? वो तुम्हारा लैप्स पीरियड होगा, उसमें तुम्हारे ऑप्शंस लैप्स हो जाएंगे. सो 1st October X3 इन द नेक्स्ट ईयर, that's the end of the exercise period. So on that day you will pass the entry that the options which have lapsed, as said in the question, that 100 options have been lapsed, right? 100 options have been lapsed, vested options have been lapsed. So you have to cancel that liability for those 100 options that you have been making, right, at the end of every years. So ESOP outstanding account, same thing, debit the liability to cancel it off. ESOP outstanding account, debit, and the calculation is very simple. 100 options have been lapsed. Yeah, 100 options have been lapsed, and ESOP outstanding account always plays on the value of option price, right? So into 120 is our value of option, isn't it? Yes, value of option is 120. So into 120, 100 into 120, that is equal to 12,000. So 12,000 liability will be extinguished, it will be cancelled off, and then the balance will be transferred to general reserve. General reserve account is credited because it has credit balance, right? To increase the general reserve, you are going to credit that. Easy, simple है ना, बहुत simple है. Just ये understand करो बराबर से. Value option हमेशा constant, ये change होता है depending upon the estimations. जो भी at the end of the year तुम estimation लगाते हो उसके basis पे change होता है, right? So उसी के according you have to do this calculation. If you do this calculation, journal entry is so simple, man. We have been doing the journal entries from the 11th standard, right? So this is nothing. Yeah, this is so simple. Just the calculation and the interpretation of the question, that is very, very important. Yeah, this diagram, once you understand the diagram, then everything is very, very, very easy, right? Is that okay? Easy, समझ में आया, right? Okay then, see you in the next video, right? Okay, bye.